And we are live. What's going on, Facebook family? This is Travis Witherspoon from Carter Cow Capital, helping you fight for your financial freedom throughout the Forex market. Today is part one of the setup, which is supposed to be an interactive session between me and you, anybody on Facebook Live, being able to talk about, in this part, we're going to end up talking about what is Forex and how you can actually be able to make money from it. So I'm actually going to end up waiting a little bit because this is a live session. I ended up posting this out a little bit earlier. We actually ended up doing one at 2 o'clock within my business page, which is cartercowcapital. And you can actually be able to look at it from there. But because this is the first day and I wanted to be able to get a little bit more people engaged to it and make them understand exactly where we're going to end up being at, I ended up setting this video up for people that actually want to look at it from my actual personal page, but this won't happen pretty much all the time. So I'm placing in a couple of sites so you can be able to take a look at it. The first one is cartercowcapital.start here. You can hit that one at any point in time when you want to be able to log in. That's a page where you can be able to get set up with personal webinars or free webinars that we end up having started based off of all of the stuff that we have for packages. But once again, today is totally free, and it's really set up for anyone that wants to be able to learn Forex. And if you have questions, this is the point in time where you can be able to ask from me or from some of the people that I have that are basically inside of the room, to where you can be able to kind of get a gauge and understand what it actually is. So while we're going through this live video, I'm going to end up waiting a couple minutes just to make sure that a few people end up logging in. After the video is over with, it will be up online. I will keep it up online as a part series. The rest of the parts will end up being in my Carter Cow Academy group. So if you are not a part of the Carter Cow Academy, what you can do is go to my business page, Carter Cow Capital, and then after that, join on to the Carter Cow Academy, which is a private group. We actually end up hitting 150 people. Very happy about that. But you can be able to join from there. Hey Lamar, how you doing? Do me a favor, just type in and say hey, so I can make sure I end up getting a message from you. You can do that inside of the little chat box. I just want to see if it actually works. But we're about to get started in a little bit. Les, how you doing? Do me a favor, once you end up joining in, just make sure that you end up typing in, or just say hey, tell me if my sound is good. We're going to get started in a couple minutes. There we go. What's going on, Lamar? Hope everything's going well with you today. But I'm not going to end up holding up everybody too much. I'm going to end up talking for about 45 minutes. We should be done with this at 9:45. I'm going to kind of bounce around and talk about everything, but it's really going to end up being a day one basics of what is Forex, and how you can be able to trade from it, how you can be able to make money from it, and everything else like that. Remember, this is a 5-part series. Within that series, what we're going to end up talking about is what is Forex. We're going to end up talking about trading terminology. We're going to end up talking about the different brokerage that you can be able to learn from, or which broker is probably better for you, how much money you should actually start with, what trading platforms you actually should be able to work with. Then after that, we're going to end up talking about certain trading styles and trading strategies that you can be able to use. And then after that, the last day, we're actually going to end up going live and seeing if there's any type of opportunities that we can be able to do in. What's going on, Justin? What's going on, Zakia? I hope everybody's doing well. Type in hey, just so you can be able to just tell me if my sound is good, and we end up going from there. We're actually getting ready to get started in 1 minute. I'm actually going to end up jumping on 2 different screens. So if I end up going off the screen, I'm still here. I'm just making sure that the PowerPoint slides are okay. Once again, this is really kind of set up for it to be interactive. So if you have any questions or anything else like that while I'm going through what I'm talking about, then please make sure that you end up asking those questions. Don't leave out of here not knowing something, or leaving here if you feel like you're being confused about something. Please ask about it, because right now we're really at a point to where this is really the time to be able to start investing. This is the time to be able to be fearless and not fearful. So I'm going to hop off the screen real quick and going to go through the disclaimer. After we go through the disclaimer, then after that, we'll go ahead and get started rolling. Okay, good. So understand this. Everything I'm going to end up talking about involves risk. Forex involves risk. That means that you can be the money that you end up placing in, you can actually be able to lose it with any type of trade that you end up taking. I'm not a CPA, so I'm not going to end up telling you whether you should buy or sell. What we're doing is for training and educational purposes only. And past performance is not indicative of future performance, and the stuff that we're going to end up talking about today is being able to understand the basics of overall trading and being able to understand what it is and how you can be able to make money from it. Now, my name is Travis Witherspoon. If you don't know me, I am the creator of the Pathfinder Auto Precision Entry Point Trading and the Fibonacci Fundamentals course that I have been pushing on Facebook and all of my other websites and everything else like that. But I'm a Forex trading specialist, which means that what I end up doing is I actually end up helping people start trading from ground one and being able to guide them through their first months of overall trading. Because typically 90% of people actually end up losing 90% of their money in the first 90 days of trading. So it's kind of hard to be able to get started if you don't have a mentor, you don't understand where to be able to start from. Please make sure that you end up getting the most out of everything that we end up talking about today. Please make sure that you end up asking questions and everything else like that. Hey, Charles. Hey, David. Hope y'all are doing very well. And please make sure that you end up getting the most out of everything that we're going to end up talking about. Now, understand this. The time is now to start investing in yourself, and I'm going to keep on stressing that. I'm a school teacher. I don't know what y'all work is. I don't know what y'all actually end up doing, but we actually end up getting pushed back into May 15th for being able to go inside of the classroom. Now, for some people that end up doing a lot of active work, what I mean by active, that means that you're trading your time for money. Then that means that you may end up being in a situation to where you may not end up having that job once you end up coming back, or whenever we end up getting everything back in place to where it seems like it's normal. So in that case, my question to you is, what are you going to end up doing to be able to create income, right? I know 5 years ago when I started trading back then, I was actually the head coach of a football team that was around here, and I ended up getting let go. And I think the previous year, I ended up making right around 10 grand, and it ended up getting cut directly in half, just like that. And I was looking at having a new kid, and we had just bought a house and everything else like that. And I didn't know exactly what to be able to do or being able to bring in income. But in times where the market is seeming like it's about to crash, it looks like we're about to get into another recession and everything else like that, this is the time to be able to ramp it up and be able to create your fortune while other people are actually being scared. Okay, so just understand that whatever your vision is, whatever your goal is, make sure that you end up writing it down and then make it a plan. And then after that, you'll end up understanding that you can be able to get it done. But in order to be able to get it done, you have to understand that you have to believe that you actually can be able to get it done. Okay, you have to. All right. How you doing, McKenna? How you doing, Jaquan? Hopefully y'all doing well. Now, once you end up understanding exactly what you're trying to do or why you're actually here in the first place, whether if it's trying to be able to create extra $200 to $300 inside of your account, being able to create passive income, being able to create generational wealth, having this actually turn into some type of job that you want to be able to do or have your own business, then make sure that you understand that's what it is and that's what you're striving for. But always speak it, activate the work, and then after that, you should see it happen. All right, as long as you end up putting the work in. Now, I'm going to jump right into it. By the people that are actually inside of this, if you're still on live, answer this question for me. Raise your hand if you've ever heard of Forex before. Or not even raise your hand. Type in a Y if you have heard about Forex. Type in N if you have not. All right, Y or yes if you've heard of Forex. Type in no or N if you have not heard of Forex. I just want to see what the delay is on my, see if there's any lag. Okay. While y'all asking that question, Forex is short for foreign exchange market. Now, understand this. When I'm saying invest, I'm not just talking about just the Forex market. Now, obviously, people are more prone to be able to look at stocks, look at bonds, look at saving accounts, look at options and any other thing like that, binary options. People end up trading those overall styles. Whatever you end up doing, I'm just saying invest in yourself, right? And be able to get that done. If you don't do anything or if you don't try to do anything from this point after we are done with this 45 minutes, you need to invest in yourself in something. But unlike the stock market, where you own a stock or a bond or a share of a company, what we're doing is evaluating the relative value of one currency to another. So understand this. The reason why I like Forex so much, and the reason why I got started in Forex compared to stocks or bonds or anything else, is that everyone has, you can see that you can have a Robinhood account, or you can start off with any other account like that, but there's thousands upon thousands of different stocks to be able to choose from. So to me, when I was looking at that, I was like, okay, well, the liquidity may be in some stocks, may be there in some stocks, and they may not be in some stocks, right? Penny stocks, you can be able to purchase a lot of them, but if there's not a lot of people that are purchasing them or buying them at that point in time, then you're not seeing a rate of return very quickly, right? If you end up getting into some of the bigger stocks like Apple and Tesla and all other stuff, then that means that you have to have more money inside of your account to be able to get started with trading inside of that. The biggest thing with the foreign exchange market is that you can be able to have a small amount of money to be able to start off with. But from there, based off of what you have inside of the account, you can actually be able to build that account up relatively quickly. Now, give me 1 second. I just want to make sure that I'm getting messages. Okay, cool. So yeah, you can be able to make money, and you can be able to get more bang for your buck by trading in the Forex market. Now, when I'm saying Forex, I'm talking about currencies. So that means like if we're looking at it, the U.S. currency is the U.S. dollar. The Canadian dollar currency, Canada is the Canadian dollar, right? Japanese is the yen. Chinese is the yuan, right? Great Britain has the pound sterling, right? We're looking at those currencies, and we're basically saying which currency is going to end up being stronger than other ones, and basically trading that strength versus the weakness of another currency. That's how you end up creating. That's how you end up creating a profit from that. Type in a Y or a yes if that makes sense. If you have any questions, go ahead and make sure that you end up typing in the chat box so I can be able to answer that question while we're actually going through. Okay. Now, the foreign exchange market is the most actively traded market in the world. More than $5 trillion is actually pushed inside of the market and traded each and every day. By comparison, this volume exceeds the global equities trading volume by 25 times. Simply what this means is that the market is very liquid, meaning that if you have a buy trade in, there's going to end up being a seller. You end up having a sell trade in, there's going to end up being a buyer that's going to end up being in very quickly. So what that does is it allows you to be able to have very equal access to be able to place in trade. Hold on for a second. My son just walked in. Upstairs. Sorry about that. So going back to what I end up saying with stocks, depending on the stock that you actually end up having, and depending on how well it's actually being traded, you may not have a buyer to be able to get in at the price that you want to be able to get in. So it actually ends up making it more of a negative than it is a positive. So the one thing with the market having so much liquidity, it allows you to be able to trade, get in and get out, and know that you're going to end up getting into the market within the time that you want to get in. Now, with that being said, there's a lot of competition every time that you end up trading. Now, understand this, the biggest part about trading in general, and this is any type of market, is that you want to be able to trade with the popular people, or you want to be able to trade with the quote unquote smart money. Well, the group of individuals that are heavily traded throughout the world includes your regular banks that you end up having, your central banks, hedge fund managers, corporations, and individual investors. In our case, we're considered an individual investor because we don't, one, we're not controlling somebody else's money, and two, we're basically end up investing our own money to be able to create a profit. Now, one other thing that's very important into doing this, because the reason why you're trading in general is to be able to create a profit, right? And I'm going to go back to this slide. You want to be able to create a profit. Understand that when you're trading for yourself, you give yourself a chance of being able to create a larger rate of return on your overall investment. Now, think about this. I know I ended up having a savings account when I was growing up. If you still have a savings account, I guarantee you look at your statement and you see what your interest rate is. You can see that it's probably 0.01 or something close to that, where you're really only making pennies on the dollar of what you end up making, which means that all of that money that you're really saving, you're really not saving it. You're really not getting no return on your investment. What's actually happening is the bank is actually making a greater risk, a return on their investment, or return on your investment, because they're using your money to be able to make more money inside of the market by being able to trade and do everything else like that. So go ahead and take that back. Give yourself a chance to be able to create more of a rate of return with your overall trading, so you can be able to create income very fast and make it be a little bit more passive while you're actually going through it. So if you're like me, until all of the stuff that actually ended up happening with the coronavirus, you're working maybe 7 to 8 hours a day, and then after that end up having to come home and then trying to go from there. The one biggest thing that the Forex market does, because it's being traded globally, is the market is open 24/5. So that means that it's open 24 hours out of the day, 5 days out of the week, which means that I know personally for me, because I'm at school from 7:15 to 2:15, I'm not able to trade within the U.S. session that opens up at 8 o'clock to 5 p.m. But I am able to trade during the Asian session, and if I can wake up early enough, then I can trade during the European session. But because the market is open within our overall time, if you're able to find a position, or if you're willing to trade within that session, you can always be able to find opportunities within the market and be able to create a profit while that's actually going on. So type in a while, yes, if that makes sense. If you have any questions, please make sure that you end up asking them while we're actually going through it. But the Asian session ranges from 5 p.m. to 6 a.m. Eastern Standard Time. The European session ranges from 2 a.m. to 11 a.m. Eastern Standard Time. And the U.S. session ranges from 8 a.m. to 5 p.m. Eastern Standard Time. Now, with that being said, the market ends up having a few different times where it actually ends up overlapping. And what I mean by overlapping is that there's some active trading zones and there are some dead trading zones inside of the market. Now, what I mean by active, just in general, doesn't mean that no one's actually there. It just means that more people actively trade during this session, right around 2 a.m. To right around 11 a.m. Now, answer this question. Why would it stop at 11 a.m.? What is happening at 11 a.m. Eastern Standard Time that makes it to where it's not necessarily active anymore? Let me see if somebody can be able to answer that question. Katie, how you doing? I hope everything's going well with you. All right. Now, what ends up happening is this. In the active zone, so let's think about this. The trading and everything else stops in the U.S. session, or basically stops in the U.S. session at 5 p.m. So any trade that is still being placed in, if it does not get transacted through the banks in the U.S. session, it automatically gets put into the European session. The Asian session is actually going on and overlapping doing the European session as is going on from there. So that means that all of these rushes of transactions that are actually being placed in for buy or sales are going to end up being hit right around 3 a.m. in the morning for us. So you actually end up seeing a big rush of actual movement and high liquidity within that overall time. So typically, if you're able to wake up right around 2 a.m. and see the market actually start to move at 3 a.m., you can really be able to see what's actually going on and actually trade from there right around 2 a.m. Be done with your trading by maybe 4, and then after that, you can be able to go throughout your day and just trade if you need to within your overall day. I know that's what I typically do, so I can be able to get done with most of my trading within that overall time. Now, the dead zone starts at 12 p.m. Eastern Standard Time, or basically noon. And the reason why that happens is because that people are actually going to lunch, and because people are actually going to lunch and people are not necessarily trading during that point in time, the sheer volume of it basically just falls off, meaning that there are not necessarily any more traders, which means that the market may end up moving more in a range at that particular point in time. Now, from there, let's think about this. The market can only move in really 2 different directions. The market can only move up or it can move down. Now, if you've ever been inside of a class, you end up saying, well, the market can move up, down, and sideways. And I do agree that it moves sideways, but what happens is that the market is basically taking a temporary pause of what the actual movement is. Okay, so anytime that the market is moving up, it's actually moving in an uptrend, which means that it's making higher highs and higher lows within the market. So you're looking at this little arrow up here. You can see higher highs and higher lows, and it basically ends up going right there. In a downtrend, the market ends up making lower lows and lower highs, within the market. From there, anytime that the market is going sideways, what actually happens is the market is actually moving in a range. When I'm saying a range, that means that it's hitting a high price or it's hitting resistance, and then after that, it's hitting a low price or it's hitting support, and it's basically staying within that number for a good bit of time before it actually ends up making its direction or going and figuring out which bear or bull is going to end up winning that actual direction. Now, going back to that, if you are looking for the market to go up, then that means that you're saying that you want to be bullish, or you're going to end up being a buyer in that situation. Obviously, buyers want to be able to buy low and sell high. Everybody's heard of that before, right? But you can actually be able to sell in the market and still be able to make a profit as well, which means that what you're actually doing is actually selling high, and then after that, buying at a lower price, and then after that, making the difference between that. But what ends up happening is that the market will end up giving you a symbol or a currency pair that you can trade with. From that, you can be able to, it's going to end up being 2 numbers that's going to end up showing up. It's going to end up being a bid and an ask price. The bid price is the price that you want to be able to get if you want to sell. The ask price is the price that you'll want to be able to get if you want to buy. And whatever's in between that will end up being the spread. Now, the spread can normally range between 1 to 5 pips, and that's the difference between that, and that typically goes to your broker. So this is actually be a good point in time to be able to talk about pips, because the name of the game when it comes down to trading is trying to be able to capture pips. So give me 1 second when it comes down to that. Let's see. Let's see. So the platform that Okay, sorry about that one more time, but so let's take a look at this a regular chart to kind of get an idea about what's going on. And I'm going to explain pips while I'm actually looking at this chart. One common chart that people actually end up looking at is the Euro USD. Disregard all of the lines and everything else. I just want to go ahead and bring up pips for a second. Now, what actually ends up happening is this. Let's say if we got 1.0010, right? And you got 1.0012, okay? If you were seeing this on a chart, when it comes down to it, this will end up being your bid price, this will end up being your ask price. If you're trying to get into the market and actually sell, then that means that you'll end up getting this number for is actually selling. If you're trying to get this number for is buying, then that will be the number that you'll get for is buying. Whatever else is in between is actually called the spread. That actually goes to your broker. So some examples of brokers like Forex.com, Oanda, right? You can be able to have them markets and that actually end up making that unless you end up doing something that's called like a limit sale. Now, with a limit sale, what that does is it actually ends up placing you in the market exactly at the price that you want to be able to get in. And then from there, you can be able to get in. And, okay, there you go. And be able to get the price that you actually want from there. Now, going back to that, what happens with pips is this. Let's say if the market ends up going down in this case at 1.00, let's say 09, right? When the market actually ends up moving down, it actually ends up moving down 1 pip. Now, a pip is a price interest point, which means that the market goes based off of the lowest denominator of your major currency. So in this case, we have the US dollar. The lowest denominator for the US dollar is pennies, right? There are 100 pennies in a dollar, which means that anytime that the market moves 1 penny, then it moves 1 pip. Now, what we can be able to do in Forex trading is that we can be able to leverage our account or be able to leverage the amount of money that we have in our account to be able to maximize our overall gain based off of the pips that we end up getting. Type in a Y or yes if that makes sense. So we can be able to move on from there. But I'm just going to type in a couple numbers and go from there. Okay, so let's think about this. If we were to buy the market right now, right, and if the market ended up moving up from 1.0012 to 1.0022, the market ended up making 10 pips off of that movement. Now, the way that you can end up making money in the market is based off of the overall leverage that you end up putting in. So let's talk about this. We go micro lots. 1 micro lot is equal to 10 cents a pip. So that means that every time that the market moves up 1 penny, you actually end up making 10 cents. The market ends up going down, then you actually end up losing 10 cents. So if we was to buy, in this case, at 1.0012 and close out at 1.0022, then that means that for that movement, if we end up doing it based off of 1 micro, then we end up making $1 based off of that movement. Now, if we wanted to trade based off of 1 mini lot is $1 a pip. So in this case, that same movement, that same trade that you end up having, actually end up moving up. Actually end up moving up 10 pips. 10 pips times $1 will end up being basically $10 of actual movement in the market. All right, so in that case, you end up making $10 based off of that movement. And then after that, you have the big boy, which is one standard lot. And a standard lot, what ends up happening is that you're actually trading $10 a pip. So based off of that same movement, that same way of being able to trade, the market ends up moving up 10 pips, 10 times $10. It's basically $100 based off of that movement. Okay, so that's the power of being able to trade, where you end up having leverage and being able to have a little bit more in your account to be able to make your account grow within that overall time. If that makes sense, please make sure, or if you have a question about that, please make sure that you end up writing a question so I can make sure that I can be able to answer that while I'm actually going on. I'm actually trying to get my son to be able to go to bed. It's past his bedtime. He's actually looking at me and playing games actually while we speak. So you hear my son in the background, I do apologize, but it's bedtime in our household. Now, with that being said, going off everything that we just talked about right there, obviously,
it's a butterfly.
When you're trading in general, there's a couple types of orders that you can be able to place in. There's a market order, which means that, let's say, if you want to get in at 1.0012, if you end up clicking on buy, in this case, you may not get that actual number. You will get whatever number that actually ends up being hit once the order is triggered. Now, sometimes that can be able to help, and sometimes that can be able to hurt you, because you can actually be able to get slippage. What slippage is when the market basically moves too fast and it basically ends up putting you into a different number. So let's say in this case, the market started going up very fast. You wanted to get it at 12. You actually end up getting it at 14. Because you end up doing a market order, you end up getting whatever they end up fitting you within for the overall trade. Now, if you end up doing a limit order, going back to what we ended up talking about before, if you wanted to get in at 1.0012 for it to buy, then the market will have to move past your number or beyond your number plus the actual spread to be able to get you placed into that number. But with that being said, you do not have to pay the brokerage fee for that actual trade, which allows you to be able to get in the market directly at the number that you want to get into. Now, the problem with that sometimes is that if your number is not triggered, or if your number is hit but it does not hit the spread, then you may not be placed into that order. Now, personally, what I end up doing with certain types of trades, I actually just say, hey, I'm just going to go ahead and pay the market order. And then sometimes I'm saying I actually want to get in at this actual number, and I actually end up trading from there. Then from there, you'll end up having a protective stop. It is very important, and I'm going to say this over and over and over again over the course of the next 5 days. It is very important to always have a protective stop. Now, there are going to be some people that actually trade that may end up not believing what I end up saying based off of this. This is my train of thought. Anytime that you end up trading with a protective stop, you know automatically how much money you're willing to lose, right? And if it goes away from you, then you say that if you're willing to lose $50 on this trade, then you lost $50, and then you can move on and go to the next trade, right? But if you don't have a stop, then that means that if you wake up, and let's say you go to sleep because the market is 24/5, and then you wake up and you see that the market end up basically pushing away from you more than what you was actually expecting, that $50 that you thought that you can end up losing can easily turn to $100 to $150. The market actually ended up gapping almost 300 pips. So a couple days ago, or actually last weekend, when the market ended up opening up on Sunday. So if you would have never had that spot to be able to get into, that could have been almost a $300 loss, and the market kept on going down from there. So it's always important to be able to have a protective stop anytime that you end up doing a trade. All right. Now, the last one is basically a take profit, and I don't have it on here, but it's very important to know what a take profit is. Basically, what you're saying is, in a take profit position, that means that that's the amount of money that you're willing to be able to win, or how much you want to be able to cash out on. Now, obviously, the name of the game anytime that you're trading is that you want to be able to risk as little as you can to be able to make as much as you can, right? And be able to go from there. So to kind of give you an example of what I actually mean by that is, I'm gonna show you one of the trades that me and some of my students that we end up having that's in my Fibonacci fundamentals course actually end up taking. This was on the Euro USD, and let's see, the market. Okay, so this happened on the Euro USD, and we actually ended up getting into this trade on the 9th of March, and today is the 23rd. Let's see, I actually got skipped out. Let's see if it'll connect. Okay, sorry about that for the people that just got clicked on. Okay, sorry about that. Something happened on my end. But what actually ended up happening is this. We actually ended up placing in a limit order at this 618 level, or the golden ratio. We actually end up getting into that a little bit later on. If you're interested in being able to learn about Fibonacci trading, you can go to that website that I have at the top and be able to go from there. But we actually end up selling it at that number, and we said that our stop was going to end up being 415 pips. Now, if you look at this, you might end up saying, well, hey, based off everything that you just talked about, if you do it based off of mini lot, then you're risking $415. Well, at the end of the day, anytime that you're trading, you're always trying to risk as little as possible to be able to make as much as possible. So my risk in this case may have been 415 pips, but my reward at this particular point in time, my reward at this point in time is right around 1,280 pips from that actual movement. So literally, it's basically a 1-to-3 risk reward ratio, meaning that for every time that the market ends up moving my way, it's basically like I'm making 3 pips compared to 1 pip actually losing. Now, in that case, if we're looking at that, let's just talk about, let's round it up and let's say 1,300 pips, right? In this case, if we're saying one micro lot is 10 cents a pip, we make 1,300 pips, and that means that we make $130 based off of that movement, right? So 1,300 pips. All right, we go 1 micro. That's $130. If it actually ends up going into this actual position of take profit, right? If we do it off of 1 mini, in that case, how much would it be? Somebody answer that question for me. If it's 1 mini lot at $1 a pip, 1,300 pips, then how much is that? So Dennis, how you doing? So 1,300 pips, market ends up moving out one mini lot, it's $1 a pip. Basically, what you end up doing was you end up making $1,300 based off of that movement, right? Now, if you had a little bit more money in your account and you end up trading based off of 1 standard, then that 1,300 pip movement will actually end up being $13,000 inside of your account. Now, here's the thing that excited me when it came down to overall trading. These are the same trades. This is the same trade that you end up taking from day one to where you end up taking it, where you're very comfortable with overall trading. If you're able to spot out opportunities that allow you to be able to risk very little to be able to make very much, and as a high percentage trade, which means that there's a very high probability that the market is going to end up moving to your favor, then that means that you can be able to make $130, $1,300, $13,000 based off of 1 trade, and then leave the room and allow the market to be able to do what it does, right? If that's not passive income, I don't know what is, right? Because honestly, if you're saying to me, I have to walk inside of school, or I have to go to school, and then after that, from there, I have to work 9 to 5 to be able to do everything that I want to do, and then after that, I only make a certain amount of money based off of whatever my salary is. But I can turn around and be able to make $1,300 over the course of, let's say, in this case, it's been right around 12 something days. Then I will always choose being able to learn a skill that I can be able to make money myself over being able to work for someone else. Okay, type in a Y yes if that makes sense. Charles, how you doing? I hope everything's going well. All right, if that makes sense to you, then this would be something that you should be very much interested in being able to go through within the next 5 days of what we're going to end up talking about. All right, now we got about 6 minutes left, and this kind of ties into what we're going to end up ending off on. I'm actually going to stop right here. But currently, right now, at this particular point, what we're looking at it, we actually end up getting here at this price. We got it at 1.1424. currently in the market as we speak. I am currently up. I'll see the market ended up going right there. There's about 679 pips of that 1,300 pips, right? We end up making a sell on the 9th. We end up basically being patient and allow the market to be able to move down. The U.S. dollar has been gaining strength because of what's been going on with the coronavirus and the U.S. being a little bit more proactive. So it's giving it a chance to be able to push back up. Now, sometimes it doesn't happen like that. Sometimes it actually ends up moving very slow. But because of the volatility in the market, it's giving you an opportunity to be able to sell and be able to create profit very quickly. Now, some people will actually end up getting out of this trade, cashing out. You end up making $600, $6,000, or $62, and actually end up being good with that. Sorry about that. And actually be able to move on from there. What we teach over here is the power of patience and allowing the market to be able to move. There's no reason for us to be able to get out of this trade. What we're actually trying to do is actually be able to compound our overall trades by adding going to the trade while it's actually moving down in our overall favor. Now, if that makes sense, please type in a wire yes, or we can be able to move on from there. Now, as we close out today, tomorrow, what we're going to end up talking about is trading terminology. What I mean by trading terminology, you're going to end up learning basically some of the common things that are basically being said, like bulls, bears, loonies, CJ, and all other stuff. We're going to end up talking about that terminology, how that kind of plays into the market, being able to understand that. If you have not ever went to my website before, please take the time to be able to go to CarterCalCapital.start here. If you want to hop inside of a free webinar and be able to learn some more about what we do for our Fibonacci fundamentals class, all you have to do is type in your email address, type in everything else. Make sure you click down here at Fibonacci fundamentals, and then after that, once you end up clicking on subscribe, click on join the session, because that end up being a 2-part video actually end up going on. We actually end up talking about trade rankings inside of that session, which is pre-recorded. It's very good information, very good stuff that's actually from there. Now, because you actually end up signing in and because y'all actually end up going from there, all you have to do once you end up signing in is that if you click on this link where it ends up saying this book, Success in Forex, or I'm getting ready to give you a link now. Let's see. CarterCalCapital.com / Success in Forex. If you end up clicking on that link, you'll actually end up getting a copy of my free book. Or copy of my book is not free. It's actually on Amazon, but you end up getting it for free. And it's basically everything that I wish I would have known within trading my first year. So some of the stuff that we actually end up talking about within this session and some of the things that we actually end up talking about in this. And I think it's basically a very good way of being able to get started, being able to understand some information from there. Now, once again, as we close out, I won't do this on my personal page tomorrow. I'm actually going to end up doing this on Carter Cal Capital, my business page. If you end up going to the business page, you can be able to link on from there. If you go and you type in Carter Cal Academy and you want to be able to log in from there, you can actually be able to get in. But until then, everyone, y'all end up having a good one. Thank you for actually joining in. I do appreciate your time and your patience and everything else like that from being able to join in. Like always, plan your trade your plan. Everyone, y'all end up having a good one. See you tomorrow at 2 o'clock. I'm going to end up going from 2 o'clock p.m. to 2:45. A lot of people are actually going to end up being indoors and staying at home, so you have a little bit of time to be able to go through everything. Y'all have a good one.